Squad on the set action.
Welcome to the November edition of the Contra Costa Real Estate News. Before I get into this month's market trend report for sales through the just ended month of October, I want to give you an overview of a very interesting presentation that I just went to this past week. On November 3rd, I attended the 2012 California Real Estate Market Forecast. This presentation was given by Robert A. Kleinhans, a PhD and Deputy Chief Economist for the California Association of Realtors. While this was a detailed presentation with lots of statistical charts, his forecast for the housing market in California and Contra Costa was neither dire nor overly optimistic. Here are a few key points. Many people still wonder if home prices have bottomed out yet. Well, no one can predict the future, but we can look at statistical trends. This chart from his presentation graphically shows home prices for the past 11 years. It clearly shows a peak in California home prices sometime around the first quarter of 2007. And it clearly shows a trough or low point around early February of 2009. And this low point represents a whopping 59% decline in California home prices from that 2007 peak. These numbers also indicate that compared to the 2009 low point, home prices as of September of this year are about 17% higher. So have California home prices bottomed out in 2009? Maybe. Mr. Kleinhans points out that California home prices are still way below their 2007 peak. These relatively still low prices, coupled with historically low interest rates as shown in this chart, well, look at this chart. Look at these interest rates, has caused a soaring increase in California's Housing Affordability Index. Here in this chart, the blue line is California's index and the red line is the U.S. Affordability Index. Furthermore, recently, the availability of rental units has dropped significantly, and at the same time, he points out on a statewide level, rents are high, up about 8%. This could convert renters into potential buyers. Based on these and many other factors in his presentation, Mr. Kleinhans' forecast for 2012 is cautiously optimistic. He expects a slow improvement in the housing market with decreasing numbers of distressed sales and stabilizing home prices. Let's hope he's right. Now back to my local report on Contra Costa home sales through the just completed month of October. The number of homes sold is down in October when compared to this past September. However, the drop may be somewhat attributable to seasonal factors that commonly come into play this time of year. It's interesting to note that we do see a 7% increase in the number of homes sold when compared to October of last year in 2010. And it's even more interesting that the number of newly signed contracts entered into last month is now at a one-year high, actually 77% higher. Yes, I said 77% higher than October of 2010. At the same time, the number of homes available for sale this October is at a one-year low. While these sales figures seem to indicate a significant increase in demand with a corresponding significant decrease in supply, no one is suggesting that we are about to have a significant rebound in the Contra Costa housing market, but rather that there appears to be a trend showing a gradual month-to-month improvement in line with the projections of Mr. Kleinhans gave in his 2012 housing forecast for California. As always, all the charts I use for my research are available for download using the link on this page. And if you found this informative, please click our like button on this page. And feel free to share this video with friends and family members who you think might have an interest in California real estate. Well, that's it for now, and once again, thanks for watching.